Deal making is a trait of a mental strength, or rather your ability to steer something which is difficult for two sides to meet. From Banduk at a garage in a table space, and staying at workers' colony of Naval Dockyard at Kanjurmarg as 4 class, which is the lowest category of the workers' colony, in which I was getting a bed, not bed, on the floor to take your bed and then sleep between 8 o'clock in the night to morning 8 o'clock. So the trait of that finding difficult path every time when you is somewhere which builds your character, and then every such difficult deal, so to say, help us to build certain learning from that, some earning for sure, and that becomes a learning for the next deal, that these are the things to be addressed the next time. We are not going to succeed all the time. You can only gain out of it. The moment you start comparing yourself with others, some will be smaller than you, some will be bigger than you. Then what happens? At times you start feeling bad because others are much bigger. You start feeling shortened, or rather you feel left out. 20% M&A fail is an understatement. 90% fail, I would.
Hi all, welcome to the Strategic Pulse. I'm your host Sudarshan Praveen. Today we have Mr. Mahesh Singhi, founder of Singhi Advisors, as our podcast guest. Singhi Advisors is one of the top 5 investment banking firms in India. In this episode, we will deep dive into his journey and understand the world of investment banking. We will also understand how Mr. Singhi is making a remarkable difference in the investment banking community, which I'm sure will inspire, teach, and educate a lot of us, and I'm sure will motivate us too. Stay tuned and watch the entire episode. And if you like the content which we are putting out, then please like, share, and subscribe to our channel. Thank you so much. Hi, sir. Welcome to the show.
Good afternoon.
Good afternoon, sir. So what inspired you to start Singhi Advisors 35 years ago? What was your vision when you started?
Real vision was there was no vision. I just started. You don't plan too many things when you start. Right? You just jump to the well and life will start for you.
So what was your initial inspiration when you started your firm?
There is a history behind that. I'm a mechanical engineer. I'm not a typical chartered accountant or a management graduate to start iBanking. And when I started, it was not a iBanking firm. When I came to Mumbai in '89, at the age of 23, I started Singhi and Associate. And that point of time, it was a project consultancy firm. And why project consultancy firm? Because as an engineer, and if you don't have money to start a business, you try to do something, and what best to do? Okay, become an advisor. So I came here '89, one table space and one sleeping bed at Kanjurmarg, and the Singhi starts on 6th of January '89. So the idea at that time was to give a business to a first generation entrepreneur, because there was a mindset that the business is always started by people who are already in a business or industry specifically. So coming from an engineering background and having worked for 1 year with a company called LML Vespa in Kanpur as a shop floor engineer, the only experience which I had was to set up a factory that time. And when I came to Bombay, I came with some dreams that when you come here, I think everything will be solved or resolved. But that was not the case. When you come here, you realize that even to stay somewhere is not that easy. Even to find a place to start an office is not that easy. Everything very expensive. But also there is a solution for every problem. You have a revenue sharing, you get an office. If you have a shared accommodation, you can get a place to live night 8 o'clock to morning 8 o'clock. So cutting it short, when I came to Bombay, I thought that I will help first generation entrepreneur to start a manufacturing setup by giving them project on a concept to commissioning. And that was a theme for Singhi and Associate that point of time. And my journey started from Banduk at a garage in a table space, and staying at workers' colony of Naval Dockyard at Kanjurmarg as 4 class, which is the lowest category of the workers' colony, in which I was getting a bed, not bed, on the floor to take your bed and then sleep between 8 o'clock in the night to morning 8 o'clock. But I think no regret, because we didn't have much expectation from our life coming from a middle class family. We didn't have much expectation. But what was desired that time, that do something which allowed me to have my dream live through others' dream. that's how Singhi takes a birth.
So, like you said, when you were initially starting out, there must have been some tough phases in your life. Do you remember any of those phases? And do you remember what it taught you?
Personally, I believe that everything which is tough or difficult, I start enjoying that. So when you enjoy a toughness or when you enjoy a difficult moment, you remember every single moment what you live with that. That doesn't mean that I had a regret of or some bad feeling about why their life has been tough, because when you have nothing to lose, you can only gain out of it. So when I left my job in Kanpur, which is LML, and coming from a good college, which is NIT Jaipur, I knew that I'm a little better than many others in this world, because in the entire state of Rajasthan, there were only 450 seats. That means I was one of the 450 engineers in Rajasthan. Unlike in Mumbai, one mohalla you have 450 seats available. So when I joined the company LML, I realized that my workers used to draw salary double than mine. My salary was 1380 rupees, 1400 minus 20 rupees ESI, right? And the workers used to be 3000 plus minimum. And any chart accountant that time was minimum 5000 rupees. When we school days, the best of the lot used to go to engineering, then medical, then commerce, then arts. By the time you come out of a college, you realize that your value is as much as this only, right? Nevertheless, when I came to Bombay, I realized that I cannot lose anything more than this. So my loss was already calculated, and I knew that I'll make more than this for sure in the time to come. And if nothing else, I'll join somewhere. But joining somewhere was never an option available to me, because I decided that I'll never join any company after that.
How did you onboard your first client?
So when I shifted to Bombay and taken an office at Garage Space in Bandup, my senior, which is Mr. Luhadia, my landlord, and also a mentor to me in a way, because he gave me a place to sit. So he was a director with ISI, and he used to get a lot of inquiries after his retirement of setting up laboratory. So he got a reference of this company who wanted to set up a factory as an engineer, and his family business was dairy, like a typical North Indian dairy tabela, I would say. So his desire was to set up a factory, because that's how the respect would come to them. So sat with them. It was a referral based assignment where I had the arrangement that the revenue will be shared, but the client will be serviced by me. So that was a factory. I set it up for him on a machine keys, and I think over the period of they become pretty large in the business what they did. So they were a first client, and for long there was a reference, because from his reference I got two more clients, and then went on, and the life has been never bad for me after that. But the first client I onboarded after 3 months of struggle.
Okay.
So what to do or where to do, how to do, figure it out was not that easy. But once I got, and then it was more technical in nature. And with the time, I started learning the tricks of the trade on the commercial side of it also. That's good.
If you could give a piece of advice to your younger self, what would that be?
Believe in yourself.
Okay.
If you find some problem in expectations, or if you feel that some weaknesses in you, identify that. Don't be worried with that. It's so hard on the weakness that they become your strength. So as a person and as an organization, both ways, we always try to find our weakest thing every time. And every 3-4 years time, we do analyze what are our weaknesses, and the weaknesses identified is easier to solve. Weakness is not identified, you don't solve anything. So never be worried of your weaknesses. Either you complement them or supplement through your teams and the friends or the associate or business partner, or develop your self skill so that your weakness doesn't come on your head. Once you know that you are going to do it, you will actually do it.
Having done so many deals so far, has there been any lasting impact of any particular deal on your business as well as on your personal life?
So I would say other way around. It is a personality of mine which is taking challenges, or finding the most difficult path ahead is the one I always choose. Has got me to deal making. So deal making is a trait of a mental strength, or rather your ability to steer something which is difficult for two sides to meet. So the trait of that finding difficult path every time when you give is somewhere which builds your character, and then every such difficult deal, so to say, help us to build certain learning from that, some earning for sure, and that becomes a learning for the next deal, that these are the things to be addressed at the next time. You are not going to succeed all the time, but even your small failures gives you good learning. And failing is what? We always say it's never a failure, it's a deferred success.
So those unfamiliar with investment banking, can you explain to our audience what investment banking means in simple terms?
So investment banking somewhere it is misread by the market by having public market by bond issues or public issues or investment banking also means deal making with M&A. It could be private equities, corporate finance. All are called investment banking. But for us, what we do is a deal making, which is M&A. We are 100% M&A driven. Why that is so? Because that is the most difficult part of a business practice in a consulting, to sell one's business to others' business at the same time. One feel good about the business, other feel bad about the business or not good enough. It's a personality of the person who leads the business. Deal making per se M&A. Those who have a challenge taking ability, or those who can say that they can see opportunity in a problem, are the one who will always make good in a deal making. So you don't see problem as a problem. You always see problem as an opportunity. Or if there is no problem, then we find problems. Problem is always there. Look for that problem. Problem could be gap in shareholding alignment. It could be financial alignment. It could be capacity mismatch. It could be technological mismatch, like what you do and the next level the technology will change. Market focus not being correct, or maybe missing some market which are supposed to be there. So every gap or every identified gap creates some opportunity for a company to fill that through internal, that is organically, external through M&As. We try to fill the gaps through corporate actions, which is partnership, joint ventures, acquisitions, or if nothing else, sell out.
As per our latest reports, Singhi Advisors are amongst the top 5 investment banking firms in India. So, what are the key factors that led it to get to this stage?
We never counted our numbers. We just keep doing what we do the best. And we always believe that our comparison and competition is to from ourselves only. If we are able to better ourselves every month, every day, every year basis, then the path is always open. The moment you start comparing yourself with others, some will be smaller than you, some will be bigger than you. Then what happens? At times you start feeling bad because others are much bigger. You start feeling shortened, or rather you feel left out. And that's where the psychological disadvantage come to people who start, because they start comparing from a money perspective. But more than the money, if you have some conviction and if you have some belief in your own capabilities and your faith on yourself, that yes, if given the choice, you'll try to do better than others. I think with the time, whether it's a top 5 or top 10 or top 2, it doesn't matter to you, because you do exactly what you like. The numbers and the league follows you. It's not other way around. You don't target that I have to be number one, this reason I do XYZ. You have to target your own skill, that if your skills are better than others, if your inputs are correct, output has to be correct. So we always believe in giving complete focus on our internal skill, our internal process, our belief system, our knowledge, our relationship. It's all us first, the rest follows with us.
Would you like to burst any myth about investment banking or specifically mergers and acquisitions which people have in general?
Generally, people say 80% M&A fail. Generally, people like, and they create this reason and excuse to not to follow a path of accelerated growth or releasing capital through M&A. However, 20% M&A fail is an understatement. 90% fail, I would say. However, if you are a chartered accountant, right, the pass ratio is 1%, 2% at the most. 98% still pursue that CA, because they believe that 1% who succeed will do best, right? Or like same IS for 0.6%, or any such difficult path. This success ratio could be 1%, could be 10%. But those who succeed extremely well. Those who fail, it is not the activities fail them, their ability to in, complete the intended purpose. If it is not played well, that's why they will fail. I cannot say about others' experience, but in our case, almost 80-90% of the chances of transactions that we advise serves the intended purpose. It doesn't fail. So it's a question of choosing your path. You cannot just go by the mathematics that 90% M&A fail, 80% fail, so we should not do. That is a reason to not to do. Right? Is you can say okay, when you go to Bombay Pune highway, every day there is some 130 deaths or 50 deaths. Right? Does it mean that you will not go to the route? You will still go because in your mind you decided that chances of that are enough to take that path. So the myth that M&A fail is a excuse to not to pursue a path, because if you are very clear that M&A gives you accelerated path to go, and once you are able to integrate the new business acquired with your own business, then it's a question of your own ability to integrate, not others' ability to give to you. Those who just combine the numbers and say, that, okay, I just have to double my company and I'm acquiring because my market is giving money to me, or the deal is available and I'm acquiring it, then they're bound to fail. But that happens in every space of your life. Without a purpose, you do something, you're bound to fail. Your purpose is strong and your ability to integrate is good. You are generally not going to fail. Even if you are failing in one way, you will learn some other way. You can absorb it.
Wow, very nicely said. So you have completed over 1,000 transactions over 24 countries is what I've read. So what has been the most complex deal for you which you have come across?
Yet to come.
Yet to come.
Because those we have completed is not complex. We already solved the complexity out of it. Right?
So any unforgettable deal?
Many different age of life, different situation. It becomes more, instead of a tactical ability, it becomes more your ability to manage the expectation of two sides. What is a deal, or in nurse element? There is one business, there is another business. The business is done by people, not by machine. Machines are required to do business. So our analogy is always to understand the psychology of the two sides of people, that who will think what way, how they are going to act upon a given situation. And as I said, that some people get opportunity in a problem, some people see problem as an opportunity. And we have to see from that positive angle that what is that the real game out of this. If you are able to understand the problem and convey it well, I think that becomes easy. Now, the learning from each such situation is to not the M&A as a process, but ability to meet and deal with people who have a differentiated nature. You deal with a French company, they think differently. If you meet with a Japanese company, they will not express what they think was this. You meet with a Indian owner, family-run business, they think differently. If you need a Indian ownership but professional company, think differently. So each ownership has a different thinking pattern. We have to understand and analyze how they are going to act upon what they think. If their thinking mindset is not understood, I don't think that you can deal with them. Otherwise, it's a game of chances. So the most complex part of the entire game is to understand the people around. Who are you going to deal with? If that is understood, the rest falls in place.
And many founders, they usually hesitate to pursue M&A in their company. So what is your advice to them? When should they pursue mergers and acquisition? When should they avoid it?
Okay, generally, when we go and meet a company, we don't go with a fixed mindset idea. We just go and meet, and we are well researched about what they do, what the peers do, how they are performing versus how the competitors are doing in India and worldwide, and find the areas that these are the areas where this target company is doing good. These are the areas where the companies have some missing link or some gaps in the businesses. So business is nothing but your ability to diagnose the problem. Like if you like in a body, if you go to a doctor, first you say okay, go and get all this blood check, your BP, your sugar, everything check. Once you know that this is exactly the problem in your body, is where the medicine works for you. Same way in a business, if you are able to diagnose your problem, the problem is a relative terms, because if you are suppose you are healthy and your BP is say 80 130 and 90 140 is a over BP, right, high BP. So it's a relative term. In a business also, someone has a debt to EBITDA leverage, sometimes return on capital, sometimes your risk versus your return ratios are much lesser situation. Your organizational IQ capital is not good enough to take the organizational risk. So everywhere we have to understand and measure where do we stand. At that time, if we are able to understand these are the gap area, if we are able to get the client on the same page as we want them to, then this is a transaction possibility. Sometimes they look for a problem to accept and accept this with the transaction ability. So sometimes they sell, sometimes they buy. Buy means if you have a company where there are two businesses, one business is performing good relatively, and one business part of the stream is okay, profitable but not as good as other part of the division of the company. So we generally tell them, okay, get off this one business and strengthen the other business. So there is a circulation of capital and management time within the businesses they do. So it's not M&A is only sell or buy. M&A is your ability to conduct a business in a constantly transformative way where you lose something, you gain something. If you're not able to do this, then better lose everything to somebody else. So in one line we try to say to our client is go up or go out. There's nothing which is being on the same place and running, and without running you'll fail any which way. So if you don't find a way to go up, then better others to come and take your place and they go up and you go out. If you don't go out, then you anyway fall back today or after 5 years or 10 years time. So go up and go out is a clear combination we try to give. Some people who are able to understand it, they are flexible enough to accept the problem and help the advisors to execute the plan rightfully, and it works well. So in our experience in the last 36 years, I think 60-70% of the target audience, if they're right, they generally listen to us. The question is, which are the target audience we are targeting? If we are saying something and they don't want to listen, then they are not our target audience. Like we can't be saying something to defend dumb people, right? It doesn't mean that they will not do this well. It's a question of our ability to connect with them. We cannot connect with everyone in this world, but those who connect with us, then it's our responsibility to ensure that they get the message clear.
And how do you truly evaluate the deal to be a win-win from both the sides?
If it is not win-win, the deal will not happen. Win-win is what? Like one's exiting, others buying. One is converting business into cash, others converting his cash into business. Right? It's the currency changes from one active capital to passive capital. Right? So you have to. It's like like a trade. Like you can go and buy some product. When you buy a product, one is selling a product, you are buying a product. Right? Your money goes to his pocket. His product comes to your business. Also like this, your addition is acceptable only when they find a value in that business, right? At the same time, the people who are running the business, if they feel that it's better for them to cash out partly or fully, that's only difference, then it works. It's a question of how do you understand the problem and communicate back to them. If they're convinced, it will succeed. If they're half convinced, it will fail between the process. Or if they sell it, they'll fail a loser. I've seen many examples where a seller lost everything, uh, sold at a zero price, and just came out of a personal liabilities or a collateral security given to bank and release of the other losses. They are still as happy as they should have been because they understood that this was the right thing for them to have done. If not, it would have been even much worse for them. So it's not happy or unhappy, it's a question of ability to convey that this is good for you. If it is good for you, better accept it. If they accept it, they'll be happy. They'll not accept it, what will happen? Either they'll not do a deal or they'll do the deal with a force and then they keep cribbing for the rest of their life. Then they'll not be happy. So we have to understand who are those people who will act upon your guidance and they accept the reality. The buyer will always think that, oh, get me cheap deal. Right? So half the mandate we advise our buy side mandate. So the moment the client come and say, oh, we have now appointed you, please get the deal at a lower valuation or a cheaper valuation. So our assisted answer is you appointed us to get a deal, not to reduce the valuation. If you want to reduce the valuation, then you first negotiate deal, then appoint us. So that we know that this is what we have done. Otherwise, the role is to get a correct business available to you at the correct price. Correct price at which both parties feel happy about it. That's a fine balance we have to maintain. If not, then it's better as an advisor to come out of the deal because you can't deal with people who are wanting to be unhappy. They'll be anyway unhappy. They'll not do a deal. They'll waste your time, others' time, any which way.
What are the common mistakes people do in mergers and acquisitions, and how can they be avoided?
Common mistake is not applying common sense. When you deal with people, it's a people integration. Machine comes later. Many times a company acquire a business, the people become more confident or more aggressive than what they should have. They feel that they are now owner. Fine, you don't own asset. You own the intellectual asset of the company. So you cannot deal with the people on the other side. Then you are bound to make some mistake, right? So the common mistake people generally make is a biased mindset that now they're bigger than the seller. That normally does happen. Sometimes sellers sell through choice also. They have a choice to not to sell. Many times a company sell a non-core business, which is good, but not fitting the non-core long-term strategy. That doesn't make a business bad. Same way when acquirer comes, the acquirer doesn't come as a owner. The people also come. Their CFO, their executive director, their compliance officer, their team, HR team. They'll also come and they believe that yes, we are better or bigger than them. That generally doesn't happen all the time. So it's a people integration and process integration are the biggest challenges in any transaction to succeed or not to succeed. So if the intended purpose is understood, the purpose also need to be implemented in the rightful manner. That's the reason it's important to understand the softer aspect of the deal. At times, it is good to not acquire 100%, acquire only say 51, 75% stake and give enough time to integrate two organizations till the time the handing over the management is smooth in the hands of acquirer. If not, by force, if you acquire something, you are going to lose. So the choice always is to find the right path. If that is correctly understood, the rest of the problem is not there.
So many companies have their own in-house mergers and acquisitions department as such. So how do independent advisors like you come handy to them?
Hirandani Hospital can have hundreds of doctors, but still they need visiting faculties or a specialist, right? The advisor's role is to act as a shock absorber. Once you are part of a core companies, it may help you to create a good strategy team, corporate strategic planning, working gap analysis, but in a critical deal, there are two kind of transactions deals which are available, which are to be processed like a processor. I want to sell clearly. They appointed a advisor to run a process run deal, which is okay. Give me the bid, and others will come, and the buyer will come, give their bid, give their offer, and this is all the process driven M&A. It may be okay for the internal M&A team to work upon or a natural buyer, natural seller to work upon. But any specific transaction which need to be steered or created or curated, you need a specialist. So we come in the basket of that specialist mindset that yes, by our being in the game, something will be changed or something will be advantageous to our client. If a company is available for sale, that means the company is available to you and your competitor also. To how to steer that it doesn't go to the hands of your competitor, it comes to you only. That is where exactly your neutrality or your hunting skill come in the picture. That is difficult for an internal team to do. So routine transaction, yes, they will always have all business always say Tatas or Bidlas or Kilos. Everyone has their own internal team. They still appoint advisors, not just to make the deal, getting the deal, but also to ensure they smoothen the process of handholding or the shock absorber or the conditioning required. And as I said, if it is not a little difficult, that is doesn't excite us to be in part of it. So we leave that part or easy part of deal to the internal team of corporates or a big force or whoever want to do this. Is we try to choose those picks where we feel that we can add some value.
Does it make any financial sense in terms of like appointing an independent advisor? Is it cheaper for them as such, or how does the costing work here?
You don't get services just because cheap or expensive. Right? If the services cannot add its own value, then it can't be. So if you are not able to create your own value to a client, then even if you have 1/10 of your cost, you still be a cost to them. You can multiply your value to a client, then you can't be a cost. So cheaper is a relative mindset, right? Cheaper is what comparison between you versus other advisor. Yes, that is a fair competition. You have to be in market and competitive enough. Otherwise, for a company to compare that, oh, if I appoint an advisor, if I don't appoint an advisor, I save the cost. Then the cost is many times more to the client because at times where to pull back and where to stop. That discipline is difficult for a company to do it themselves because they are in it. They are not above the problem. As an advisor, we are always above the problem. So we can see from overview side that okay, how we steer it. The correct path to steer the transaction is also important to where to stop and where to hit back again. So it's almost like a war-like situation. At times you are just comfortable doing nothing and doing a watch. At times you come on the front and hit hard or start shooting. Right? So it may be possible to do with a internal team. It's like a police force versus army. Right? Police force is like a internal team of a company. Right? It works locally. The moment you need a specialist situation, you need an army to come in. Right? They know exactly where to shoot hard.
So we have some fun rapid fire questions for you. Uh, Equity or control? What matters more in the long run?
Both are control. Partial or see, your equity has to play a role. It has to play a role to the extent of your skin in the game, right? The highest equity doesn't mean that you will exercise the equal control. It's a question who can influence the influence part of equity is more important. That is a control. You may own 70% stake in the company, but you cannot control the process. Then the 70% is not control. Your ability to influence the decision making of the company rightfully is a control to me.
M&A is becoming too easy. Agree or disagree?
Disagree.
Most IPOs in India right now are overhyped. Your take?
I have been there for last 2 3 years time. Overhyped is understatement or glorified.
What's the most underrated skill in deal making?
Common sense.
A book or movie that actually gets investment banking right?
Each one get inspired by their own disease. For me, I got inspired long before I read a book. I don't read many books, but this Alchemist, where you follow your dream. So when you follow your dream, you try to believe in what you are and keep running the way you are running. So we always believe that follow your dream, bring your skill to a level at which you can mitigate your constraint to your advantage. Right? Your constraint always become your advantage.
If a 22-year-old told you, I want to build an investment bank, what's your 20-second advice?
Each opportunity is different, right? So whether it's 22 years or 62 years of age, I started at the age of 23. I didn't know that I'm going to start an investment bank, but I knew for sure that what I start today, today's work has to be done nicely. If you do this well, tomorrow is better for you. So whatever you do, whether it's an investment bank or this is, you don't design your organization. You always create something around your character. So know your character and build around your own character. Don't try to be others.
What's one question people should ask you but never do?
Those who believe in what they receive, they don't ask question. They actually act upon it. Questions is only asked by someone who don't want to implement this and just want to make themselves agree that oh, this is my point of view, and they look around that oh, whether others say the same thing or not. Those who believe in action, they don't look for a question or answer outside. They look for question answer inside only.
So we are moving towards the questions again. What financial principles should generally business adopt to be attractive in M&A?
The first line in any business when we analyze and we make our client and everyone around us to believe that business is a risk, accept this, but not taking risk in the business puts business into a risk. Right? So better take risk, but take measured risk. And there's a dialogue from Harshad Mehta movie like risk hai to ishq hai. Yes, we all believe the risk hai to ishq hai, but ishq cannot be blind. Risk cannot be blind. Take a calculated, calibrated risk. And the risk can be measured by different kind of a company, different sectors. Sometimes we advise that has to be at least 3:1 debt to EBITDA. Some sector like consumer could be 1:2 or 2:1 debt to EBITDA situation. But most probably we always measure the risk carrying capacity of the business at the rule of 1 2 3. That is our internal way of presenting to our client that what is the rule of 1 2 3. One time equivalent earning for running the business, that is 1 year EBITDA. Second year earning for growing the business, that is what I'm going to do after 3 years time. I should start investing today. And third year's earning is a risk capital डुबाने के लिए, चलाने के लिए, बढ़ाने के लिए, डुबाने के लिए. The third year's EBITDA is a risk carrying capacity which accelerated growth that is generally used in a M&A strategy. So if the risk carrying capacity is calculated, that is measured over a year of 3 years or 4 years horizon, you know exactly that your calibrated risk allow you to accelerate your growth faster than others. And that's a every year's job. It's not after 3 years I'll decide. Every year at the end of year, you have to decide how much is the risk I've put in my business to run, how much of business capital I put to grow, and how much risk is to diversify or to go to the next stage of a growth. And that's 1 2 3 game actually applies everywhere.
Wow, yeah, that's absolutely true. How should mid-sized firms prepare for funding from large corporations?
First, money comes from your internal capital. Right? We always measure our capital through the balance sheet first. People, generally in our field, people end up doing only EBITDA calculation, do not go to balance sheet. So first we measure our own balance sheet that each process of a business, are they generating return higher than risk capital or not? You can first decide your risk capital. Generally, that is 1.5 times of our buying borrowing rate. If your borrowing is 10%, your return capital has to be 15%. Somewhere, if it is less, then it's less. So every process is big different kind of money. So if you are able to measure your own risk reward, you can generally release good capital internally. Then the rest capital go from borrowing, then come from an external capital. So as long as your capital is the last one to be added to the entire chain, then only you should raise capital. If this is the first thing to be added from external, what will happen with the first capital? Your organization will become slack or very, very relaxed. Right. And what will happen? The entire team also become very comfortable because they will believe that the money is always available. Money is not always available. That's what is happening in us in so-called tech world or the VC funded space. That money is your way to burn capital, and they still have a unicorn. We don't believe in that kind of service. Business is to make money today or tomorrow. If you are not able to create capital, then you have to also be aware that you are creating a business to sell. But be clear in your mind that what is that you are going to create. So the capital raising and how much to raise is a question of how much that capital is going to be benefiting you today and in the next 2 3 years time also. If there is not an exponential return coming to you, or in nutshell, if you are not able to generate incremental return, which is at least 1.5 times of borrowing cost, then and then only you should generate capital. If not, stop. First, put your house in order, and then go outside. You can't you can't fill your gaps in the business to capital alone. That is a problem. 90%, 80% time is faced in the market. They try to fund the losses or fund the problem through capital without correcting the problem. The problem will not change after that because then you get used to that. So if you feel that the parameters are not correct, stop, correct, and then go to market for the right purpose. Capital is always available. Sometimes to financial investor, sometimes to strategic partners, sometimes to your public market also, but not before the time comes.
A lot of family-run businesses often struggle with succession. What's your advice to them?
Create success at every stage. And I say succession are two kinds. One is successor of family-owned blood relationship with successor. Or else, if you create a process in the organization, every process is succeeded by next person in the line. That's the best successor. Build an organization where every process has a successor, right? It becomes people to be an organization. Whether they're there or not there, the dream of any first generation entrepreneur is to build an organization which lasts beyond them. Now, you're not going to look at a person, whether a son or daughter or your nephew or someone, that, oh, I'm building business for them. Entrepreneur build business first for themselves and then for the desire to let it last beyond them. So that's only possible when you have processes and principles set as a cultural organization which allow each one to do their role, and each one has a responsibility to grow the person next in the line. If you are able to build an organization where next person is groomed by the first person, that's a success.
Uday Kotak sir recently said in an interview that nowadays the younger generations are busy managing the wealth of families rather than building companies. And what's your take on that?
100% agree with that. Because managing is what? Managing is not creating. It is protecting or at most growing it. Creating needs a this is like a when you get a child admitted to school, the teacher will manage your kids, right? They don't give birth to their kid. The mother always get a better pride because they give birth to the child. They create the birth. They create the baby, right? So it's your choice to become a mother or a teacher. Teacher is not bad, but mother always comes above the teacher.
Nice cross reference again. So, having achieved so much so far, what does success mean to you now?
I don't think I'm successful as yet. I still believe that my world start every day. What success? At the end of it, feeling happy. I was happy 30 years back. I'm happy now also.
But what keeps you motivated? Because I mean, initially there must be, like if you see Maslow's hierarchy of needs, probably money would have been an issue. House, like you said, you were staying in Bhandup and you didn't have a proper house to stay. So having achieved all of that and being almost at the top skill,
The different age time, your challenges are different. Like you need some challenges in your life, right? So maybe first 5 years you work hard to survive because every month you have to pay rent, every month you have to pay this, and we come from a background where actually how do you buy the next day's vegetable were not known to us. The rent is a distant team. But then that made us work hard or cut the best out of us. So after some time it becomes a habit to look for a problem. So once that become a habit, then excitement is not money. You don't even realize how the money excitement converts into a building of something. So the excitement is today to build something which is like a best baby in the world. So the building expectation or the excitement of building something is even one life is good not good enough to say happy with that, right? You're always excited in seeing your baby grow.
right? So at what, like, what's your personal relationship with money? When did money stop exciting you?
No, long back, never.
Okay.
When I came here also, when the money was excited in Bombay, I had a option to take a salary of 3 times more than what I used to get, right? Or most of the client would have expected me to join them only and save that fees, right? It didn't happen because I realized that is what is that I'm given money or respect. I think it's a respect. The respect of building something was never compromised at the cost of money, and that still remains the same. Money versus respect or intellectual capital or the organizational goodwill. I think I know my answer well. Then money comes the last to me. Money is needed to ensure that the organization run, right? And fortunately, in God's grace, we always made enough to have our people remain with us. But I think it's not the money which our team, which is 65 plus, remained with us. It was the culture and the belonging of the Singhi which gets them together. That's where the culture is a bigger power than the money power. Money can be given by many. Culture is something not easy to build.
What's your advice for the youth, for the next generation of entrepreneurs?
Believe in yourself.
Believe in yourself. And how have you seen the M&A landscape evolve over the years?
Different time needs different skill set, right? Bad times, good times, high capital market, low capital market, changing market. So theme keep changing. But the only thing which works is you are going to do some external action only when your internal problems are known to you. So when you are looking internal as much as external, you are trying to find the gap of your internal problem to external acquisitions, partnerships, sale, or whatever you can say. And that's a constantly evolving process. So there's nothing which is constant as a theme. There's a time when any M&A in 90s, if you are sick only, then the business are sold. In Y2K time, this was a corporate capital Y2K or VC fund started coming in. Most only foreign capital came to India, blah blah. Then in early 2000, M&A means only MNCs will come and acquire business. Then your Lehman Brothers time, an Indian company is going to overseas market because the markets of capital markets are very high. So any group has to have some business in Europe for sure, right? Tech boom comes. No, I need to have some technology companies in this case. Mining boom comes. Everywhere will be like a coal mining, Indonesia, Australia, everyone says. Each cycle need a different theme. Some fail, some succeed. What is important that recalibrate your business decision based on the real requirement of the world. Just for the heck of acquiring a business or selling business, you don't do a deal. Similar way, people always believe, no, I should never sell my business. Why not? If it's not performing as per expectation, it doesn't have a delta to grow. Better leave the business to someone else and you do something better than what you can do. Otherwise, you're always occupied with something and justifying what you're doing. Keep running and you're not safe. So you don't have to chase something which you don't own. Find that what excites you. If your excitement as a you individual as organization is understood, then you let go of something. Let go of something is not let go. You're going to vacate the capacity, fill the capacity with something better. So if you let go of something which is not fitting well and let in something which is going to add value on every stage, that's where your M&A strategy work for you. So you have to vacate your time, your capital, your management time, your resources, not to just vacate, but fill that with positive capital, gap in the businesses, new market, new technology. So once you're vacating, you're filling it back, you're going to do always well. See. But that people is easier said than done. People do not do it so easily because they get comfortable. We always say never get comfortable. The best comfort is only when you're uncomfortable.
Okay. What global investment trends should Indian investors watch out for in the next 5-10 years?
Global India is the same. I don't think that what's global. It is also part of the globe. Right? So it's all going to be even what's relevant to you. I don't think we have to watch others to do what we do. If we give enough time to do what we are supposed to do, then the world is anyway immaterial to us. It will fall in place. As I said that yes, it's important to watch others how they do differently. That doesn't make you bad. Capture what a difference and try to map that in your own manner. You can't be others. You be what you are and capture this is. And if you cannot capture, then get them in. Right? That's how you have always a different culture to come along with you, country wise and company wise also. A company run in Delhi will be run differently than Hyderabad than in Tamil Nadu, even though they are all in India. Forget even the business owner staying in Malabar Hills will think differently than the business owner living in Borivali. Does it make business good or bad? No. You have to also understand that how they think and recalibrate, right? And if there's a gap, combine them together, right? If you can align your next with past, that is where your business can go on. So your next has to be understood, your past has to be understood. Present is always in your hand. What we always look for a future and without correcting the past and present is not your hand, then the God is never going to help you. फिर बोलते हैं जयराम जी की कुछ नहीं होने वाला.
So, also, congratulations on being awarded the ET Entrepreneur of the Year award. What does this recognition mean to you personally and to Singhi Advisors?
More excitement.
More excitement. And this almost brings us to the end of the podcast. We have one final question for you. A lot of young professionals usually they get inspired by your journey, but they also usually get intimidated by your journey and by your success. So, what's one thing you wish everyone knew about your journey which is not talked enough about?
I think I said again, it's a inner belief system, right? So first learn to respect yourself. You never be intimidated. No one has a power to put you down or intimidate you if you are not wanting to. So learn to respect yourself. And if you feel that something is lacking in you, don't get worried with that. Work so hard on that. So the weakness become a strength. And once your weakness becomes a strength, then never to worry. So never get intimidated. When you learn to respect yourself, others will anyway respect you. You don't expect that others will respect you and you don't respect yourself, right? पहले अपने आप की तारीफ करनी पड़ेगी. First try to know that yes, you are the best one in this world. But just not by saying it, by proving it right everyday basis, right? And make your world larger around you. You don't see the world is the entire world. Just make a small world out of you. In that, try to exceed. Right? So, in one line, I can say that we can improve every day on a small basis. The end of 365 is a big change. So, don't try to change everything overnight. A little extra work every day, little extra change every day, and then wait. 365 down the year, you're far ahead of others.
Thank you so much, sir, for taking the time out and sharing your wise words with us. Sir, it was an absolute pleasure to have you.
My pleasure. Thank you. Thank you.
Thank you for watching this episode till the very end. Hope you found this episode to be valuable and insightful. If you did, then please like, share, and subscribe to our channel, as your support will help us grow and bring you more insightful conversations from entrepreneurs from all walks of life. Thank you.